late in the day. So pretty good stuff there. Even daily profit play, if you stuck it out through the day, I know you would have been required to hang on to it through most of it, but market makers still kept things in check. There's your one big sell off, and then we hit that positive negative gamma right around that 68.50 zone, 68.60 zone. Zero DD kicked right back in and distributed the price action right back to the inefficiency. So overall, volatile, inefficient day. We'll take a look at the Fed watch tool this morning, see what that did to change possibly the probabilities for. I guess I'll share my screen, huh? Sorry. All right. Larry says I did my degenerate daily profit play. We got out 20 cents profit. Okay. Ernesto says got the 40 cents. Good, good, good. I don't know where the poll is there, Snapper, if you only posted that to a couple people or you posted to everybody. All right, futures down a decent amount this morning, down 0.43. We did have Meta, Microsoft, Google with earnings. Google is up. Meta is quite a bit lower. So Meta down, 10% or so. We might be getting filled on a Newsbreakers trade. Let's see if I put in a trade on Newsbreakers or I want to wait a little bit longer. Check. So did I put in a Meta trade? Yes. Oh, that was 8:15 expiration. That one didn't fill. Okay, so no active trade on Meta. I think Microsoft has a pending order. Microsoft, November 465 by 470. Yep, I was looking to see, if it would come back down to the support levels. So Meta did miss an EPS similar to what Tesla did. I mean, interestingly enough, it's right down to, I don't know, this probably would offer a bullish opportunity. If we gap lower, give this till the end of the year. There's two spots. I mean, we either hold the support and go right back to fill the gap, or we are coming down for this, gap level or possibly revisiting these lows. I think a lot more, terrible things would have to happen for Meta to drop that far. It is still, a cash cow. They beat on revenue. They beat on revenue. So, anywho, not a bad spot. Let me check the fair market value. 26 times earnings. I mean, not a bad stab. I might take a look at this one this morning for a small bull call spread. If it was like a 670, 675, hold support, see if we get a gap fill, maybe swing this trade out to like November, December. Just see if we get a gap fill. That's all. I mean, from the recent highs, that would be a discount of around 15%. Not a bad spot. There's more volatility. We could gap and go lower. I get it. Two spots. I would either say small trade here. I would say I don't want the spreads to be $5. If they were 250, I don't mind that trade, just so you could tighten up the risk a little bit. Or down here, going out maybe 60 days. See if that will go up from there, or 60 days go from there. Gap fill. One-time tax charge beta on everything without one-time charge. Greg says daily profit play held on to a 92% take profit for $1,400 win. Awesome, Greg. Awesome stuff there. There we go. All right, I'll take a look at Meta this morning. I'll write that one down. So Meta, I did some rolls yesterday. I rolled some Tesla. I rolled some Nvidia. I rolled some Qs. I rolled some SPY. Just additional income trades. Rolled those out to December 19th for the most part. I think I did the Nvidia roll for January. Collected an extra, let's see, 208 on Nvidia. Qs, I rolled up for another $515. Tesla rolled for, I kept the same strike, $2.93. So just under $300 on a roll for Tesla. So some income there, which is good. I had a silver trade close out. That was the 28th for profit. Closed out some naked puts today. Couple winners on double up this week. So far, so good. Futures is red. So we'll take a look at our levels. We have gamma on both sides. Yesterday was a volatile day. We could be slipping into negative gamma territory this morning. So VIX is at 1664. That's a pretty big jump overnight. 15.7 VIX all the way to 16. This will make for a pretty interesting morning just because VIX is up and futures down. So we'll see if this is just a noisy VIX day. I believe U.S. and China are talking today. I saw online that they wrapped trade talks within like 90 minutes. I don't know how long. I don't know. So I'm sure you can see what the headline news is. Markets clearly are down a little bit, weary. And let me check the Fed Watch tool. Was that daily profit rate bonus trade an SLV? I think it was a project options edge trade. Let me double check. I'm not sure what trade you're talking about. Here is project options edge. Here's silver. I mean, there's a campaign trade that I did. If that's what you're referring to, that's a project options edge trade. So I'm still in that trade. Is that the one? No, I'm still on the one. No. I closed out silver futures, SI, ticker SI. It was a similar trade to what I do on waterfall income with strategy 2. I took that on silver for project options edge. So close that one out. This one's still running. I still have the shares. This one is not a trade I'm going to close. I'm going to try to lower my cost basis. So if SLV drops to like 36 or 35 or 34, I'll start protecting that long put. I may get rid of the call as well and just take this, hopefully net profit on the collar trade, and then lower my cost basis down to like, maybe within 50 cents or a dollar of the actual price, and then let it run to see if we get back to highs. Okay, here's your watch tool now. So the probabilities did change a little bit. It's still showing that December is a higher probability rate cut than not. So here's the current. So it was up into the 70s or 80s. Now it's 68.8. Market still expects a rate cut. That was the language that kind of caught the market off guard yesterday, is that it's not a foregone conclusion that we will be cutting rates. So Powell stuck to the script. They've been worried about inflation more than recently. Recently, it's pivoted into we need to worry about labor, but the Fed members are now kind of split on which is more important, inflation or labor. And basically, he's just telling us they're going month by month. 40-50 bull call spread. Oh yeah, I'm still on that one, I think. That's like out of ways though. That's like a 2027, 2028 trade, right? That's way out there. Yeah. That trade's January of 2028 for sure. Yep. I don't remember what if that was a bonus trade. It had to be, I don't know, project options edge most likely. But it's way out there. So not really worried about that one. It is $1.65 debit to make $3.35. So I was throwing in a longer term with more contracts. Should be able to make about $1,000 on that trade. I mean, I think we'll be back about $50 in the next few years. I would hope. Um, More than likely, I'm going to go after. I mean, I think the trade has enough time. If I don't want to wait until 2028 on the profits, then I'd say as long as it's a 1-to-1 or better, I'll probably take the profit. So if it's showing 165, that'd be 100% return. So three contracts. So if I'm up 500 bucks on the trade out of the max, so 335 times three, that's my max profit. If I'm up about 500 bucks, I'll take it. So if this is, 50% of the max profit, I'll probably take it. If it's the trade-off is I don't have to be in the trade for another year or two, so we'll see what happens. But yeah, it's way out there. Okay, here's where we're at this morning. Positive, negative gamma. Looks like we'd be opening up with negative gamma if we're below 68.70 this morning. 68.80 if we're opening red. Here's SPY 683. This would be opening up. So either we open immediately and just start buying the dip, or I still think the market needs to come back and try to find some gap fills. Um, Whether it does or doesn't, I don't know. Today could be interesting just because we'd open up a negative gamma. Futures are high. Are we breaking some floors this morning? I mean, yesterday, if you saw this in the morning with us, this level was pretty much right at the positive negative gamma. That is why we positioned our butterfly spread there. We had an iron butterfly for double ups yesterday, and as soon as price came down to it, we started seeing some pretty good profit. So I posted that in Telegram. This is the morning, very quiet all morning, but volatility was still high and still sticky. But that dropped for the morning and a little bit more. So we had a low right around 68.51. And then later in the day, we did something like this where it was 51 lows, comes back up here, came back down again. That was late enough in the day to offer about a $300 to $400 winner. And then off we go to kind of narrow the inefficiency. So if you managed it, and I kept posting on this, I mean, I was pretty vocal in Telegram. So 248 trading around 1650 debit, 336 trading under $15 debit. If you let it cash settle, it would have been a loss. Right? This is why we manage profits. So you had a $2.45 winner here. You had a $3.95 winner here. And it was trading for like 14.75, 14.50. I think that was the best I saw. So anyway, good profit potential. And that was, that magical window that the last like 30 minutes of the day, if you're inside those iron butterfly traps, if you're inside those broke wing butterfly traps, if you're inside those butterfly spread traps, those work pretty well. Okay. Snapper, are you like spamming the group? Like, what are you talking about? There's no poll, dude. I don't know what you're seeing. What is happening? Yeah, I mean, maybe it was early this morning. I don't think there's history. So if somebody comes in late, you can't see the very tippy top. Like I can see your first message that says, please read up. So I don't see it. Deanna, do you see it? Anyway, that's about all I have to say about that. Okay, so SPY opening a little bit softer, futures for about 0.4% to the downside. Let's see our levels today. We could quickly get into negative gamma. Dr. John says your Discord channel scammed. Yeah, well, I told you from the very beginning that Discord is full of that stuff in the private side, not my public side. So I tell everyone literally my rule number one in my Discord is look, The only reason I put Discord together is because I've got a lot of content in a lot of places, and it was one-stop shop to park my content links and affiliate links and stuff. So this is rule number one. Okay, no scammers, no direct messages from me. If you're in my Discord, I post here, 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 here. All my stuff is in these links. So offline direct messages, friend requests, all that stuff that all the scammers do, all the stuff you get in Telegram, all the fake stuff from Roger Scott, all the fake stuff from Lance Ippolito, for me, it's all the same. You got to watch for that stuff. You want me for real? It's this session. It's, my one Telegram channel that's public. It's my one Discord channel that I run, and I talk to all traders in the public channels. So you can send me direct messages, but this is me. This is a real message from Chris. Live session example. Because rules states I don't send friend requests or initiate direct messages. There you go. So if you want to message me, you can click on this profile and message me. That will reach me. But if you come into my Discord and all of a sudden it's a real Chris Pulver with 2 R's, real Chris Pulver with a period, a real Chris Pulver with a number, click on this. If it's not both the same, real Chris Pulver, nobody can duplicate that. Okay. So if it's not that, it's not me. And that's why I state I don't send direct messages unless you send them to me, then I'll respond. But I don't initiate because I know that crap happens. So anyway, I get it. And there's Discords that's full of that stuff, and Telegram's full of that stuff, and WhatsApp is full of that stuff. I get it. But obviously, little common sense prevails. Somebody's trying to have a conversation with you, and then it flips to crypto, and I can do this for you. It's like, it's fake, So just my channels have been the same for literally like 3, 4, 5 years, All right. Anyway, what's going on this morning? Futures down, negative gamma. We'll see if there's support around 68.50. Yes, no, maybe so. That would keep things pretty contained. Let's check on that broken wing butterfly. If we open up lower today, I'm curious what that's going to look like. This is a bonus session I did in my final hour a couple days ago. So the 70, 40, 70, 50, 70, 70, if we're opening softer today, this one's up $85 from what I can see. If it's possible I can get over $100 out of this trade today, I'd probably just take the profit. Okay. All right, Snapper. Well, yeah, I get it, man. But I mean, you're kind of blowing up the chat with something that I couldn't see and something that most other people couldn't see either. So wasn't sure what's going on there. I know, like, I see you every day, but it was just weird to see those messages so consistent with like, check the poll. It's like, I don't see it. All right. Okay. So Meta down at the morning. We'll take a look at that one. I do think that maybe has an opportunity for a, gap fill type trade. Microsoft also a little bit softer, down about $10. Not a huge mover on Microsoft. Let's see here. Google was the other one. Google blasted through all-time highs. Google's up almost $20. Hard to beat that, but it's up 6.8%. Chipotle getting smashed down to 31. Yikes. I might be taking some ownership of Chipotle. I still think, I do have some naked puts on here. Let's see what fair value is on Chipotle. 34 times earnings. It's coming down to fair value. I can sell some puts, or I can sell some calls and repair. If I take any ownership, I know I would be watching this. So let me go to CMG. 37.50, 40, 42.50. If I'm willing to own shares, I am. $40 break even. 38.31. If I get assigned on all of my levels, so all of my levels break even would be 38.31. I'm curious if the broker is going to assign me anytime soon. So right here, these are December 19th, 42.50, 40, and 37.50 naked puts. If I'm assigned, then I repair. So I know my break even. I'd be in for 300 shares. If I could get, 50 cents a share, $1 a share, like I'd flip it, repair it, and not worry about it. So we'll see. I'll keep an eye on that for assignment, but not super expensive if I get assigned, and hopefully something I can repair. Food isn't as good. I mean, in a pinch, it's not bad. I've had worse fast food. So I think what's annoying is that it's like $20 to get a burrito bowl. So fast casual, but it's now gotten more and more expensive. I really don't know what's going on. It's like I'm sure it's still busy, but I know there's competitors. I mean, there's Chipotle, there's Qdoba out here in Utah. There was a Cafe Rio that's now Costa Vida. Those are two really popular chains that are pretty much the exact same thing. There's still Chipotle out here, but anyway, there's clearly some stuff going on, and they missed in revenue. So anyway, it's getting hurt pretty bad. Just in the trend. I mean, Darden Restaurants, I think that's DRI. Darden Restaurants also down a little bit. It's like, the consumer, everyone says the consumer's doing fine. It's like, oh, it depends on where you're looking. You look at the high end consumer, yeah, they're doing fine. Look at Visa, MasterCard, right? Visa hanging in your all time highs. MasterCard down a little bit. Look at Amex at all time highs. So your higher end consumer, like, no problem. Assets up, all time highs. We can spend money. But Sweet Greens, that was the other one that was the fast casual that took a huge dump. Yeah, look at this thing. Oof. From the peak in 2024, Sweet Greens down 85%. Who says this is a value trade? Not me. I think there's something clearly bad going on. Like, you don't want to play around with this stock. If it's got like one more pump of energy into it, great, but you're going to be a bag holder as a pump and dump from this point. Like, I'm not interested. So crazy stuff. SFM, Sprouts, also way down. I've not been in this trade, no, but this stock is also down 50 plus percent. This is a grocery store, or Sprouts is a grocery store, right? Grocery store chain. Yeah, healthy grocery stores. Um, I, I mean, healthy food is expensive. Their margins are probably really, really bad. If people have to cut back, it's like, well, I can't afford to buy my organic kale, vanilla, whatever. I mean, I eat pretty healthy, but still, it is annoying. Um, Stuff's expensive. I feel like their margins have to be really light. And if people all of a sudden are like, look, my grocery bills are killing me, you go lighter, you go cheaper, you know, you shop at Walmart. So I think that could lead to it. Anyway, doing daily profit. I mean, we're doing daily profit play right now. Here we go. So we're opening lower. How much lower? About 0.4%. Let's crunch some numbers on the VIX. We're at 1664. Okay. So opening up here. Let's go real-time gamma. EHC. I've got an EHC trade filled. That's newsbreakers, I believe. Pinch point. EHC filled. We did a 110 by 115 call on EHC. Pinch point has a new trade added. Okay. Look, immediate market reaction is falling. VIX at 1664. Keep an eye on organic. Like, if we clear these levels, a couple things here, right? We could hold this gamma level, pull back into this 6880. That's going to be the key level, whether we're going positive, negative gamma. If this gets into open space to the downside, we start tuning into this gap. These are going to adjust. There's probably going to be another put wall put in a little bit lower, maybe around 6,800. I'll go to that in just a second. Okay, so here are my real-time levels. Could we sneak a move into 6,800 today? Maybe. There's a lot of put support in here, right around that 50% ATR. So again, lots of gaps. Last couple weeks, like this week, lots of gaps. Let's see what the expected move is on the day. It is the 30th today. So plus minus 38 points to open. So from 50 up to the close is 90. I mean, if we fill the gap, that's already pushing the expected move. Let me see if I can get a reverse iron condor going today. 45, 50, 60, 55. Really? 15 wide just not going to cut it. 20 wide offering pretty lame credit. Yeah, they're just not offering the right credit. This is now 25 wide. I'm still only getting 570. It's just not pricing out the right way for me on a reverse iron condor, so I'm not going to take it. Let's get in some VIX levels, 1684. Okay, so 1.05%. If we open here, it's way up there, but I don't mind putting some trades on. Either 69.11 or 69.20. I'm going to throw a couple of bear call spreads in to be pending. 69. I'm going to go 20 by 30. Okay. So, I mean, I'm taking on a lot of risk here. I don't want to, I mean, I think this is a pretty safe trade for the day, but I'm taking on about $1,800 risk to get that $1.20, even though I think that trade's pretty darn safe. Probably the safer trade is just to take the 20 by 30 for, let's go $2. If it's offering $1 each, maybe I'll take the trade. So that's 20 by 30, 25 by 35. Okay, if these offer $1. MO getting slammed. Do they have earnings? Oh, baby. What do I have in MO? I closed out a bunch of naked puts earlier. MO naked put combo. Okay, that's out to next summer, next summer, next summer, next summer. Yeah, I don't mind taking those. Just it was I've taken a lot of profit on MO last year. This thing made me like, I don't know, $150,000 or something. Totally surprising. Like it was a planned, like take some ownership and get a 6% dividend. It was really like boring stuff that was just like, well, it's a better yield than cash. It's a better yield than bonds. And it worked out fine. Plus the price appreciated like crazy. So I got lucky on that trade. Now that it's pulling back, I don't mind getting the assignment. I'll play around with the assignment levels, but I think this still gets into like the 70s. I mean, if there's a discount on it, that's actually kind of good. MO is Ultra. So trading way below estimated value, reliable dividend almost 7%, 11 times earnings. I mean, I like that. So, any discounts I can get, I'll keep it. Times get tough, people will probably still smoke and drink. That's the dirt portfolio. Okay. So immediate trade this morning. If you jumped right in for a bear call spread, it's going to your way. Be mindful of November 10th trade looking good. Yeah, it should be looking good, right? Let me see what it is over 100 bucks. If it's over $100, I might just take the profit now. 107. It's not bad. We're close. So this trade is trading for about 30. I mean, that's just over $100. Let me see if we can get out of here for, I'll take 30 cents. If I can get 30 cents today, I'll take it. Just take the $105 winner. I'll set it at 30 cents. If it gets filled, this morning, that'd be great. Let's take a quick hunt. ITRI just got hit. That's for profit. ITRI just got closed out for 550. 550 credit. That's a nice little winner. 550 out of a 405 debit. I hit a 35.8% winner. Pinch point. Trade management. We did have a trade filled this morning. EHC. Trade number 65. EHC. Filled for debit spread. Then ITRI. Trade number 49. ITRI. Entry 405 debit. Closed 550 credit. Broker closed for auto profit. 35.8% turn on risk. Okay. So EHC filled, ITRI hit profit. Let me go to EHC because I want to put in a take profit on that one. So 245, we can make 5. Let's go after a 40%er here. 245, so 98 cents. So 343. I'll go 350. Oh, I'll stick to 40%. 343 credit. Okay, updated for pinch point. It's called the optimism got priced in. That's why. I mean, look, it wasn't hard to see that this market was not moving very efficiently this week. This like run up. Trump's taco trade since October 10th, and gap on CPI, gap the next day, optimism, earnings coming in. It's like the market pricing, all the good stuff, priced in the Fed rate cut, like all this stuff just kind of pushed up. It wasn't a huge surprise to see that this market probably got a little overextended. Okay. Let me see if my SPX, we should be able to grab $100 out of that trade today. It's got to be close. I would think by, tomorrow or the weekend, this is going to be today. I mean, it could get filled today. If we fall a little bit lower, it gets filled today. Awesome. Yep, not filled yet. But if we get filled today, great. If it's not, but we're still kind of hanging out around these levels, the nice thing about this trade is take a look at the option trade. So right now, where is the 70-50 on the options chain? So go out to the 10th, look at 70-50 on the options chain. 70-50 is now trading for a 6 delta. So if you remember when I took the trade, it was a 16 delta. So even mechanically, it's like, well, we still have a 85% chance of winning this trade. Okay. Plus we have $1,000 profit trap. But now it's a 6 delta. So we have like a 94% chance that this trade stays out of the money. This trade isn't threatened. If you want to ride this one out time-wise, Now that we're getting through this week's earnings, it's like I thought, well, if every Mag 7 company blasts through earnings and hits all-time highs, it's probably going to move the market higher. But getting, FOMC noise yesterday, gapping lower today, maybe we pull back to that 2150 period moving average to buy the dip into the end of the year. So I think this is fine. If I take $100 out of it, maybe that's today. If it's not closing today, I might just keep it at 30 cents or bump it down to 25 cents, but that trade probably gets closed out by the end of the week. I would think if we're hanging out around today's levels. Okay, so I'll put it in here for 30 cents, see if it gets filled. All right. Be careful about calling the bottoms today, but VIX at 17. Let's take a look at these levels. So VIX is going up. Okay. We're breaking through these put walls. Let me float one more thing out here. So 0 DTE, we shouldn't really go too much lower than like 6,800 today based on market maker movement. But I'm curious, like, how far out could I go? I mean, one thing that'd be very difficult would be like a 2+% move. I'm not saying it's impossible, but if we close here, that's a 1.3% sell off. Okay. If we end up pushing down towards like 6,800, that's a 1+% move. Are we coming 2+% today? I mean, we'd have to have a VIX soar if that's the case, but let me see, like 67.50. Yeah. Let's see. 67.50. Yeah, it's a lot of risk. I'll do this though. I'm going to go 67.50, 45. I'm going to put a broken wing out here. It's not going to fill. I'll take this for $1. So it's a $4 risk to make $1. Okay, it's out there. I've got a couple pending orders to post, so just bear with me here. I'll go working orders. So pending on the broken wing butterfly, pending on some bear call spreads. Maybe I don't know. Maybe now. Hang on. Let's go maybe a little bit wider on Iron Condor today. $69.05. That's a 10 delta. I'll try 10 delta. I'll go 5 wide, 10 delta, see if it fills. So if I can get $1 on this trade, I'll post it. So coming in hot for daily profit play, pending for $1, pending for $1, pending for a couple of dollars. Okay, if you want to just follow the daily profit play, I'm doing a 10 delta this morning off of current price. So pending trades. SPX, I'll put in the Iron Condor one first. 10:30 expiration. And then the bear call spreads are unlikely going to fill. That'd be back up to all-time highs. 69.25 call. $69.30. So I'm doing a 20 by 30 and a 25 by 35. Okay. Pending orders. They're in. I just posted them in Telegram for daily profit play. So we'll see. I mean, price action can do whatever it wants to do today. I'm not going to go super tight to price. I'm going to give myself some wiggle room. I'm going 10 delta, increase probabilities, get a trade and credit that I'm okay with, and see if it fills us. So we are getting a decent amount of direction this morning. Quick drop lower, right back to recentering. There's that positive negative gamma point right around 68.70. If we push up a little bit higher, I probably get filled on that dollar credit. We'll see if it, takes out this 6,900 zone, but hopefully it doesn't. And we just want to see if price stays inside of our center. So if we get filled for a buck, hopefully it's pretty easy, 30, 40, 50 cents out of it. Okay. Uh, did you close your meta trade? Yeah, I did. I bought that during Gam Report. I talked about it in Daily Profit Play. I posted it officially in the tracker. I updated the alerts for newsbreakers. That's where I took the trade. So I got out before earnings. SPX just got filled for a dollar credit. We got filled. Okay, so Daily Profit Play is active today. This is now, I'm going to take my Telegram here for Daily Profit Play. Okay, Daily Profit Play is filled. 1, 2, 3, 4. Okay, let's keep an eye on this one. So filled for a dollar. I'll set the take profit at, I'm going to go 70 cents. See if we can grab a quick winner out of that. So that is the 05 and 70. Shit, I did that. Hang on. Sorry, that's 70 and 65. This is 65. There. Sorry about that. So 5 and 10 is the bear call spread. 70 and 65 is the bull put spread filled for a buck. So here's current price. These two levels, this is my bear call spread. This is my bull put spread. There's my option chain. It's crazy, right? That went from a 10 delta to a 16 delta, but that was enough to get us filled. As long as price stays in between here, we'll be fine. So let's go back to this chart here. Looking to see if price will stay below 05. So below 69.05 and 68. 67.70. Is that right? Yeah. So if we're above 70 and below 05, then we got a pretty good looking daily profit play today. Market maker move based on the open, plus or minus 38 points. Let's see what that looks like. From here, 38 points. That would have to be a 45-point move to threaten our call side. If we drop below, we'd have to drop 80. That's crazy amounts of skew in the market. To have this pricing skew be that different, we'd have to drop 88 points to threaten the put side. You filled at $1, but Thinkorswim's still trading at 80 cents. Okay, I would think it's still trading for, double check your legs, because right now it's trading for like $1.20. So make sure I've got 67 $69.05 call and the 69.10 for a $5 wide bear call spread. 67.70 put with a 67.65 bull put spread. So, I mean, I'm showing it as a, if I took the trade here, hang on. So this trade for, where'd it go? Filled for a buck. Right now it's offering $1, $20.25 on that trade. Huh. I mean, anyway, that trade that I took should be getting filled. So the 69.05, 69.10, 67.70, 67.65. It's offering $1, $15, $20 right now to take the trade. Now, obviously, being more neutral, I mean, do I love the trade that we've gone from a 10 delta call side to a 22 delta? Not really. You know, I don't love that. But I'm trying to trust the mechanics that are plus minus, 35, 38 points in the day. We're up 45 points. We'll see if we're going to survive. It's manageable, but hopefully by the end of the day, it's like, okay, what do we do today? Do we get to the positive negative gamma pivot point and then fade? Do we come back and close the gap and then fade? We'll see. I mean, once the trades are in, it's like, this is why we trade with the best possible risk management we can have, because there's not much we can do other than take the trade with good sound mechanics and manage our risk. So if I'm dead wrong today, then I lose $4. If I'm right and let the market work and we reject this level or we stay, range bound, we go lower, we're fine. Okay, let's see how the market respects these levels. I do have those bear call spreads in at highs, which would be back above all-time highs. So if those get filled, it's like I'm getting $2 on an $8 risk. That would be a pretty wild move. Not saying the market can't do it, but 1.3% off the lows. That's an 89-point move. Even the ADR is 77 points. It's like we shouldn't be able to push more than 70 to 80 points today. VIX box wise, because we gapped lower, I'm not saying I'm shifting this like down just because I respect the VIX box highs, but still, based on the current VIX, which is retreating, based on the gamma levels, kind of hanging out right around this positive negative gamma pivot level. So let's see if there's a rejection point at 6890 or 6900. Here's what I'm watching in real time. So do we come? This is positive. If you see that little shaded orange zone in my chart, this right here above is positive, below is negative gamma. Okay, so if this is an attempt to either one, test that level and reject off of it, cool. If it is to try to fill the gap and reject off of it, cool. I'm just hoping that the technicals obey today. So far, looking okay. It's volatile, but hopefully we're not just going to see this surge to the upside. Just got filled. Okay, good. All right, keep an eye on that one. I've got the pending order in for 70 cents. So $1 filled, looking for a 70-cent exit. And if it looks, to me, if price is coming back down, 70 cents is fine. 60 cents, we could probably sneak like a 60 cents in there to go for a little bit more profit. But, not trying to be greedy on the day, just trying to take a good trade. Okay. Double up lifetime, Steve. Nice. So double ups today. Double up class is at 2 p.m. Eastern time today. So 2 p.m. Eastern time, master class for double up. Okay, not too shabby. Double ups here. Some of the last couple of trades we've taken. 95% winner. That's 95% return on risk, 190% return on risk. Loss is 70, win of 520. Loss, small, manageable. Like literally, I'm losing typically less than $100 on these losses. Winner of 158, winner 221, 80% winner. That was net profitable on the day. 140 winner, 150 winner. Those trades didn't fill. 50%, 132, 150, 85 and 40. That was a split for the day. 136, 220, 30. I mean, small wins, but 220, those are big wins. So anyway, that is the point. I mean, I really like the strategy when it comes to, hey man, I don't like to lose a lot of money. If you're that type of trader, if losses are painful for you, lose smaller. Double ups is a great way to trade that way. Lose smaller, and your winners are equally as big or bigger. So I mean, oftentimes it's a 1-to-1 or better. In fact, I love it when I can take a trade with double ups that's going to offer us like 150, 175%, 125%, 200 plus percent. Our big winners will be like 400 to 500%. They're not all the time, but it's certainly great when we get them. So yesterday was an example when the trade in Telegram was offering over a under a $15 debit. Let's do the math on that. Let's say we close it out for a $15 debit. Okay, the trade was originally for $18.95. You make $3.95 out of a 105 risk. You're up 376%. Right? So yes, Larry says made 225 yesterday. The trade offered over 300 plus percent return on risk. Okay. There's not a lot of strategies that will give you that. Okay. So when losses are small, look, I'm totally fine taking a $50 swing at the market, a $100 swing at the market, a couple $100 swing at the market. I know some traders take these with a lot more contracts. I know a trader, Sharon, she emails me quite a bit. Sharon takes like 10 contracts in all these trades. If Sharon did that trade yesterday and was up 395, I mean, that's a win for Sharon. And that's 3 times bigger than what her risk was. So, it's days like that where it's like, holy crap, that's a lot of money, you know, but to each their own. You can take small trades and lose 50 to $100, which shouldn't ever sting. If you're a real trader, that should never sting. That's part of playing the game. But when a winner can be 150, 200, 300, 400, 500, it's worth learning a strategy like that. So I really like double ups. Like I said, the only trade off for me on double ups is that it's the one service that I run where my win percentage is not 90%, right? My win percentage is 58%. But the reason it's 58% is because a lot of times I will literally choose an up trade and a down trade and try to get a net winner. So if I did that each and every time, even if I won, let's say my winner price is here and I have a winner up here and a loser down here. Well, this loses 100%. If this one gains 150%, I still walk away with a 50% return on risk for the day. And I took 2 trades, didn't even have to pick a direction, and I win. Like that is a great strategy to me because it gives me less stuff to worry about. If I just pick a direction, sure, I can have a winner. But if I get direction wrong, I have a small loser. So I don't mind, sacrificing the win percentage when my wins are also a lot bigger. And eventually, I do pinpoint that, hey, look, I think it's going to be directionally bullish only today or bearish only today. Like yesterday was just a bearish trade and it worked. Right. So anyway, double ups alerts class today at 2 p.m. Eastern time. I will still get a video out to my pinch point members. I will still get a video out to my Project Options Edge members. That will be by tomorrow end of day. So look for a video update in those classes, pinch point and Project Options Edge. I'll put that video link directly in your Telegram. Okay, I'll send it to the one-click trading as well. So pinch point, I'll put it in the alert section if you want to watch the direct link video. I think we can do that. Deanna can confirm that. So, anywho, all good. Okay. So practical options today at 2 p.m. Eastern time, or I'm sorry, double up alerts today at 2 p.m. Eastern time. What I wanted to spend today discussing is I did mention this last week. Okay. How many of you have seen or have access to one or both of my practical options courses? Practical options, this is a $27 foundational course, a prerequisite course. This full course, I actually give this to members that are lifetime. So if you upgraded to any of my services here, any of my services, probably the exception is crash insurance, just because that one's a cheap, that's a 197 class. But if you're in Project Options Edge, if you're in Pinch Point Lifetime, if you're in Double Up Alerts Lifetime, Newsbreakers Lifetime, Waterfall Income Lifetime, Daily Profit Play Lifetime, there's a $500 course that I will include. Now, what we're working on is we will have this in its own standalone course. Some of you in lifetime memberships, you already have the videos, you already have the strategy guide, but I'm going to make it its own standalone course. So that way you have, inside your one-click trading member portal, you can just type in practical options and have your full course here or the quick guide. The reason I want to do this is because I think, look, we have traders from all walks of life, all different account sizes, all different disciplines. Options comes with a learning curve. I get it. I learned options pretty much on my own. A lot of time in the market, a lot of trial and error. It started off as portfolio protection. It started off as portfolio management. It started off as generating income on own shares and positions. And then it turned into discovering all these income strategies where you don't even have to own the underlying stock. So it's better than just, I have shares, I sell calls, I buy puts. That's portfolio protection, right? Get a little bit of premium, get paid on owning positions, or obviously protect the downside, right? But then it comes to, you can trade the indexes, you can trade the SPYs, you can put naked puts out there like Warren Buffett style and just get assigned at a price you want to own the shares. So that just evolved into, yeah, there's a lot of ways to trade the markets. Options and futures, they are the force behind price action. You might think it's fundamentally driven, you might think it's technically driven. The real flows are coming from all of the futures flows and option flows that will push these market prices around. The one thing I like about options is it's still, for a 50 plus year window, it's still dictated and run by market makers. They are some of the smartest and most sophisticated funds in the world and firms in the world. And what they do is they create basically a market efficiency. And that's what we trade. So anyway, I think a lot of you, have access to it, but if you don't, I wanted to just click on these links. I want to go through a little bit of this today. I'm going to run, and this is for everybody. So if I have anybody in this service, anybody in my Telegram, anybody that follows me on YouTube, I'm going to run a free practical options workshop tomorrow. Okay. So I'm going to do double up alerts today, 2 p.m. Eastern time. And I'm going to do a practical options workshop Friday, 2 p.m. Eastern time. This is free for everybody. Okay. Everybody. If you want the videos, the quick guide is $27. It's not going to set you back an arm and a leg. I've already had, for the last couple of years, I've had great feedback on it. The reason I built it is I had nephews that were teenagers. They've been talking to me about this for years, like asking, more about what I do. They hear their buddies in school talking about Bitcoin and they're teenagers. Okay. I thought, cool, man. Like, I had one of my nephew's friends was in GameStop in 2020 and 2021. And I I was encouraging him to take profit because he was all in at GameStop. He got caught up in all the mania that was surrounding GameStop from a, bankrupt, basically on the bridge of bankruptcy company or brink of bankruptcy company, to a squeeze that basically showed the retail trader for once in a blue moon was right. And it forced, market makers like Melvin Capital to go out of business or take a line of credit. That was Citadel. They basically had to, freeze trading. The whole thing. If you watch the Dumb Money movie or you watch the any documentaries on GameStop and how this whole thing played out, it was one of the crazier things I've seen in my career. But nevertheless, retail traders were rewarded, and all of a sudden, it's like retail traders feel powerful. Retail traders like, oh, we can fight the man and fight. Okay, you didn't win. Wall Street still won. You might think that it's like people were left holding the bag on GameStop thinking it's going to the moon. It's like, you're idiots. If you got in at 20, 30, 40, $50 and it ran to two, three, $400, awesome trade. Congratulations. You got a 10 bagger. It's never going to happen again. So point is, I watched a kid turn like a $2,000 count into like 10 grand, and he didn't take any profit, and he was sitting back to about $2,500 when it was said and done. So he pretty much gave all the money back. The lesson is, I told him at, one of the biggest gaps up, I'm like, when we gapped up like $50 from previous day's close to the next day's open, I'm like, at least put in a trailing stop loss, lock in profit above $200, anything, because he had his break even was like $17. He didn't do it. So again, it's like, not mad about it. It's just like, it's unfortunate. Could have been a lot of money for a 18-year-old kid, but he didn't do it. Anyway, a lot of people want to learn how to trade options. Unfortunately, options comes with the most boring language, the craziest learning curve. You got to know about calls and puts and debits and credits and all the stupid strategy names. So I built practical options for, look, if you understand that this is what I want to do in the market, how can I trade something bullish? What's my risk? What's my reward? Let's get to the nuts and bolts of every single strategy that you hear about. I'm not reinventing the wheel. I'm not calling them like I've got these really simple names. It's like, no, I'm still calling them a bull call spread. I'm still calling it a iron butterfly. I'm still using like the industry standard names, but I'm breaking it down into what it actually is. So, what we'll do is we'll probably have a really intensive crash course on Friday. If you like it, you can have the video series. That's $27. If you take any of my classes and upgrade to lifetime, I'll give you the full course. Okay. The full course I sell, I've been selling it for the last couple of years. It's $497. I've got an on-demand page for it. Right. But I've had nothing but good feedback. And I've literally given this to anybody that's asked me, hey, Chris, I want to learn how to trade options. I give them this. Right. Hey, man, for $27, buy this course. Why? Just because if this resonates with you, if this makes sense to you, then learning anything from me or from Lance or from Kane or from Roger or from Graham or from Nate, all these experts that have been trading options for years, you have a foundation. I think that's one major thing that's missing, is that you come into the trading world, especially options, which can be a little bit more intimidating up front. But let's break down the intimidation factor. Let's pull the curtain and show that it's really just expressing, I want to be bullish in this trade. I want to be bearish in this trade. And understanding that here's my risk, here's my reward. If price is above this line, if price is below this line, there's my reward, there's my risk. The nice thing about this is every trade you place, if you choose to do defined risk trading, every trade you place has a reward to risk that before you ever execute the trade. Okay. So my days of running a currency fund and trading super, super low leverage and literally dealing with the market test lows 10 times. And everyone that I know that uses stop losses get freaking stopped out, and then they lose their position. They lose paper cut, and then the market goes their way. Getting around that, like one of the hardest lessons to teach was trade smaller, give yourself more room for error, dollar cost average into those areas of support resistance, and the market probably will reward you. I told traders for a long time, like teaching technical analysis, if you can trade support and resistance and trend lines, you can do a lot of great things in these markets. Take that into stocks, take that into the stock market, where the markets are built on a bullish market, is going to drive a lot of asset prices higher. Okay. Not every asset price higher, but for the most part, has it been a good year to be a bull this year? Gold's up, silver's up. Every single stock has been up at some point. If it's not, it's probably a terrible stock. But the indexes are up. Stocks that are driving those indexes are up by a lot. Yes, we had a correction back in March and April. But since that bottom in April, pretty much everything you threw a dart at had a chance to go higher. So you have a really good house edge by just aligning with the sentiment of the market, aligning with some pretty simple strategies that can make us really good returns. And you're getting a house edge. 55% of the time the market wants to go higher. This year, I mean, I just read this study yesterday. If anybody follows Tasty Live, okay, Liz and Jenny in the pits morning, they're doing some, like, I think they're calling their segment impatient bulls, because all these people are just doing trades at the open with bull put spreads. I took a bunch of pictures of their session yesterday. So I'll read you the summary. Okay. Again, is this a strategy discussion? It's just I'm sharing. Okay. So here's their strategy. At the money. So you do an at the money bull put spread every day. Okay. So let's talk about that right here. At the money bull put spread. Number one, do you know what that means? That's what I'm going to have a workshop on practical options, because an at the money bull put spread would be this. Here is where price is at. Okay. This is where price opens. So at the money, you sell a put and you choose your width. They like to go 10 wide. So you go sell your put here, and that strike price would be around 68.60. And then you'd be buying the 68.50. Okay. So if you do an at the money, you're probably going to get like $2 to $3 for this trade, I would imagine. I'll do it right here. If I did an at the money bull put spread, I'll sell the 70, buy the 60. I'm sorry, this, I'm going to flip this. So if I do, we're trading at 65. So I'll sell the 65, buy the 60. I get $2. So I'm risking 290 to make 210. If I go 10 wide, I'm getting 385 to risk 615. Like for a day, that's not terrible. That's not terrible. Now, what do we need price to do? All I need price to do is give me some direction on the day. If price tries to go higher, there's a good chance I can take some partial profit. Okay. So what do they do each morning? Well, I don't know if they personally take the trades. I think they do. I mean, they are traders. They talk about it in the mornings. Like I took that trade. One of them likes to manage really quickly. One of them likes to manage at noon. One of them likes to let it go all day. To them, it's funny money. I'm sure it's real trading, but still, it's like, they're not living and dying by the trading. So you sell an at the money, you go 10 wide, and you're probably going to get close to like 350, probably close to like 350 credit. Now, when price is above that put, you should see some profit on that trade. So now the question is, where do I take my profit? Right. So if I did they trade this around 10 a.m. Eastern time for entry. You do an at the money sell put, and then a 10 wide buy put. Type in a wire yes, or type in crystal clear in the chat if that makes sense. This is a bull put spread. So it's a credit spread. You're trading on SPX. You can't get assigned. It's cash settled. Okay. All right, good. So let's say this trade likely offers, I'd say, between $3.30 and probably $4 of credit per day. Okay. Let's say it's $3.50. So we use this simple example here. Let's say we take the trade and it's $3.50. So if I put in my trade, there's my sell strike. There's my buy strike. Okay. And we get filled for $3.50. So it's SPX, 10:30 expiration, sell the 68.60 put, buy the 68.50 put, get filled for $3.50 credit. That's going to be my max profit. And that means $6.50 is going to be my max risk. Okay. So how do we know when we make money? If SPX is greater than 6860, we should see some profit. If SPX is less than 6860, we will see risk. If SPX is less than 6850, we will see full risk. Okay. The most we can lose is 650. Okay. If SPX is greater than, let's say, 6860, our job is to manage profit. Mechanically, this is what they did. They've done this test for the last 2+ years. Okay. They haven't been trading it live for 2+ years, but they've tested it. So for 2+ years, we've done 0DT now for 3+ years. They do a at the money trade like this. They go after a 50% take profit target. Well, actually, the numbers vary. You can go 10%, 25%. They do 30 and 35 and 50. I'll just give you the great numbers. If you go 25% profit target, you make money. You go 30% profit target, you make money. Okay. You go 35% profit target, you make money. You go 50% profit target, you make money. Okay. Now, yes, we've been in a pretty good bull market for the last couple of years. In fact, 2023, 20+% bull market. 2024, 20+% bull market. 2025, we're up 15% for the year, 16% for the year. After the recovery from the bottom in April, the market's almost up 40% from those lows. That's a pretty good bull market, right? Point is, if you go after the 50% take profit, your win percentage is down slightly, but your gain per day and your drawdown is reduced because your winners are slightly bigger. So the average win is larger. Your win rate's like 80 something percent. I can actually find it in my phone here, but you want a higher win rate, go after a slightly lower take profit. You're just going to pull in a little bit less profit per trade. But you go after the 50%, or they do one more thing here. They will close. Okay. So either set the take profit and or close at I think they close by 12 noon Central Time, so 1 p.m. Eastern Time. So 12 p.m. Central Time. Okay, I know they're in Chicago, but everything they do on their tests and stuff, it's like they're always referring to their time. Their time is Central Time. So they close by 1 p.m. Eastern Time in order to reduce the volatility of these trades. And again, by late in the day, it's like you start to see like the full effect of your loss or profit. So you're either right or wrong. It becomes a very binary trade late in the day. So if you're willing to reduce that volatility, you might sacrifice some winners if you do that, but you're going to also reduce the volatility and reduce the size of those losses. There'll be partial losses a lot of times. Okay. So look, that's literally strategy. It doesn't have to be hard, but it's a system. It's a mechanical trade. Why are we doing this? Because the market is crazy bullish right now. And how would I put this? I mean, how would I build an edge into this market? Well, if we open lower, there's a good chance if we open lower, we're going to try to go up on the day. Maybe we do, maybe we don't. But if you manage profit to these 25, 30, 35, 50% take profit levels. So if I pulled in 350 and I set a debit at 250 or 150 or 175 would be my 50% take profit. Take the profit. Do it again the next day, right? Don't overtrade it. So, I mean, why would I teach practical options like this on Friday? Because this is a simple way to take a very straightforward strategy, like a bull put spread or a trade strategy, and apply it into something that's been working pretty nicely the last couple of years. Okay. And if all of a sudden we enter into a bear market, well, we can do the same type of thing, and you can just do this with bear call spreads. So if you are looking at the bigger picture, is the market bullish? Is the market bearish? We can draw some conclusions from that and then follow along with some opportunities to trade every single day. Okay. David says in at 110, out at 75 cents. Excellent. Good. Yep. Let's take a look at that trade real quick for daily profit play. I'm trading for 80 cents right now. Okay. I'll still let it sit. I'll let it sit for 70. I'd like to go a little bit longer. I don't know how much longer I have to hold it. But probably the closer we come back to center, then the faster my profit will be. So 70 should be very doable. I'm going to bump this down. I'm going to go 60 right now. And then before the end of the session, I'll take a look at it. I'm going to go 60 cents. Try to make a couple more bucks on it. But if it's trading for 70 or 65, I'll probably take the profit. Okay. And taking a look at our call and put sentiment this morning, it's pretty even. There's a 10-point separator. Usually if this is like 20, 30, 40 wide, then there's obviously a little bit more directional bias. But when this is like, less than 15, it's usually pretty tight price action for the day. So far, we've seen down, up, down. It's right back where we started at the open. So price is pretty centered. Okay, good stuff. Yeah, that's a good trade, David. All right, let me catch on some questions here. I got some crystal clears there. That's good. Do you train when a new person joins your service? I mean, that's why I have all the videos. That's why we do master classes. My training is going to be that. You've got class with me. You've got time with me. You got video series. Everything about the strategy that you're about to trade, everything you just took as a course. I think in my classrooms, I have one of the more comprehensive deliverables as far as buying classroom education for me. Because I know that, I don't want anybody just to come in with zero knowledge and trade blindly. The one prerequisite I do have is you got to be able to navigate a broker platform. That's the one thing I ask is when I type in an alert, you can find the calls and puts and the debits and credits in your option chain. You can manage that trade from start to finish. That's just working with your broker platform. From there, I'm happy to teach you all of the, strategies. So every broker platform has videos in YouTube or videos within their own platform to navigate and try to help you, find your trades, manage your trades. Okay. Yeah, I'm not doing a masterclass on pinch point, John. I'm doing a video for you to update our trades. I said that this week. I'm gonna do a video on pinch point. I'll do a video on Project Options Edge. Okay. Bonus, is there a way to do daily profit play Iron Condor as a 1 DTE? No, it's the same strategy. It's the same strategy. All you're gonna get, look, if you're already thinking I'm gonna go out further in time, run the numbers. Because look, I'll show you the strategy. So here's option Omega. Here's my test. Let's go DPP. We've done this many, many times. Let me get logged in here. So let's go test. Let's go DPP. Let's try this one. This one combined. That's higher deltas. Okay. 95, 95, 91. Let me try. So we did this one recently. This is September 8th, September 9th. Okay, so P&L on daily profit play. This is only on Mondays and Wednesdays, which are my favorite days to trade this. Target take profit is 25%. If I run this with a 1 DTE, okay, it's not going to mess the strategy up, but what it might do is, it'll possibly adjust the win percentage. It'll certainly adjust the trade numbers. So we're not doing this every single day. This is going to be, every other day. So cut the trade number in half. I'm curious. Let's run it. Okay. We got the trades Mondays and Wednesdays, 25% take profit. I've even put in the commission, so it's more realistic on what to expect. Run the data through the end of the month. So we'll let it run in the background. We'll figure it out. Okay. Today's daily profit play. Still hanging in there for a little bit of a gain. I'll split the difference here. I'll just set it at 65. Okay. So 1 DTE doesn't quite look as smooth. It still makes money, still wins 91% of the time, still a decent amount of trades. And plus, I guess it is taking, well, hang on a second. How many trades did I put in? Max trade 1, open trades, so it's not multiple trades. It's just 1 per day. But I think the reason why is because your average days in trade is 0.3. You're not even holding for an entire, you're not holding for an entire day. However, for whatever reason, this was not awesome from like October of 2023 into, I guess that's May of 2024. Like that's a pretty big stretch to not enjoy some profit. So, if you're already thinking, I don't like 0 DTE, I wouldn't go to 1. I would consider, if you want to go bigger picture, this trade works going out 30, 45, 60 days. You get bigger movement, you get way less volatility, you're way further out of the money. So your ranges could be hundreds of points away from current price, but then it's just a matter of time. But 1 day does not make the trade better. I think 1 day makes it worse. Because the start to finish, 0 DT, remember, the gamma risk and also the gamma profit, like everything that comes with like the accelerated moves of your underlying prices, your option prices. Gamma is the gas pedal, right? So delta is like the calculation of your underlying movement. Gamma is what is juicing that delta. I know that's stupid stuff with the Greeks, but it's basically what makes the trade, profit faster or loss faster. That's gamma. Okay. Point is, zero DTE literally has like 10 times the gamma risk and also 10 times the gamma gains. So when you're right in a 0 day environment, it's right very quickly. You've got lots of profit very quickly. When it's wrong, you're wrong very quickly, which is why everything I talk about with 0 day trading is all about risk management. You have to manage risk in a 0 day environment because trades can get away from you very quickly. Okay. Nice. Bill says 120 out of 80. Great. One DT, you pay high premium. You don't. Why would you pay a high premium when your trade's the exact same? It's still an iron condor. It's still a credit spread. You're not paying high premium. So if you're doing a daily profit play, which is an iron condor, why would I pay premium? I'm still doing a credit spread. The trade mechanics are going to be very similar. The only difference is my out of the money. Okay, if I went to tomorrow's expiration, okay, this plus or minus shows 59 points, which means I could probably take my trade from right now and I could probably go out 70, 75 points above price and below price and take my 1 day standard profit or standard daily profit play. Doesn't mean I'm right. The one thing that throws all of it off for 1 day is going to be a gap. Right? But if you're sitting on, so what's 10, 30, 11, 30, 12, 30, 1, 32, 33, 34, 30. So we've got 5.5 hours, 6.5 hours. So 6.5 times 0.3, you're going to hold those trades on average from what the test shows. If you get into a 1 DTE, you're going to hold those trades on average for about 2 hours. So you're not holding it all the way to the end of the day. You're not holding it all the way into the next day when it actually expires. A lot of times the trade mechanics will still work. Where if one particular day is range bound, that 1 DTE is still range bound. However, I look at this. It made money. Okay. It made money. It still wins. But if I take this to 0 and run it, if I make more money and I win more and I have to take the trade for less days or less time in the trade, I think that I've got a better strategy in 0 DT. That looks a little bit smoother to me. We win 95% of our trades. We're in the trade for 110 minutes, not 2 hours. So it's about the same, I guess. But we make a lot more money compounding. And that's a much silkier, smooth equity curve, you ask me. So that's the difference of like getting it right or getting it wrong in a 0 day environment versus waiting the extra day. So, there's no right or wrong answer. You're basically, it all comes back to risk. If you're comfortable taking the risk, the mechanics work. It's that simple. The only reason that people get frustrated by daily profit play is when you lose. If you lose and it hurts and it lose and you feel too bad and it's too much pain, then you don't like the strategy. Well, I can't make the strategy any easier or any better than low risk. It's not low risk. If I'm going to make $100 today maximum, and I know that my max risk is $400, I can't make it less than that. Unless I'm gonna micromanage my trade and say, well, I'm not gonna lose $400. I'll take a partial loss. Well, then I'm gonna have to micromanage my trade every freaking minute of the day. So if I can get comfortable with this, knowing that, okay, if I get $1 max profit and I close out repeatedly at 75 cents or 70 cents, you can do the math on this. It does take a fair amount of winners to make up for one losing day. But the trade-off is I win most of my trades. And in the law of large numbers, if I'm winning 95% of my trades, I'm going to make money. But it might take a sample size of 100 trades to do it. It might take a sample size of 500 trades to do it, 1,000 trades to do it. And there's lots and lots of money to be made. Right? So I'm telling you, if you don't like to risk this much money, then don't. Do something different. That's why I have double ups. That's why I talk other strategies where we go like 1 for 1. It's like, I just think the like loss aversion is very real. And it can be exhausting to, take trades. And it's like, well, I've got to have 5 winners now to make up for a loss. Yeah, I get it. I don't like doing that either. But I also know that over the course of my sample sizing, if I take the next 30 trades, I'm probably going to win most of them. So the one loss that I take and then the 20 in a row that I win, I am making money. So if you're okay with the risk, the reward is right there. You just have to trade through it. All right. So where are we at today? let me check and see a couple things. So number one is daily profit play still, it's about 20 cents, 20% positive right now, 25% positive. Give it a little bit more time. This should be fine. The Broken Wing Butterfly that's out to not next Friday, but the following Monday. It is trading for about 70 to $80 right now. Profit 75 bucks. I'm going to try to get this thing to close out for over 100. Like I said, if it goes to tomorrow or over the weekend, and we're still down, I mean, like I said, we're at a 6 delta right now for that 70-50. So if we stay around this level, that 6 delta looks very, very good and high probability. This should be able to fill for profit. So I'm hoping we can at least get 100, 105 bucks on that trade. All right. So here is the quick guide. It's 27 bucks. I've got a strategy guide, buying calls and buying puts. I'll talk more about this in the 2 p.m. workshop on Friday. My best practices on buying calls and buying puts, I'll talk about that in the class on Friday. My best practices on bullish and bearish spreads, this includes debit spreads and credit spreads, right? If you trade SPX, it doesn't matter if you like debit spreads or credit spreads. There's no assignment risk. So the trade is the trade. If you want to get out faster, credit spreads and time works faster for you. So bullish spreads typically do a better, or credit spreads do a better job to get you in and out faster. But debit spreads, sometimes you can build a debit spread, especially in individual stocks, not necessarily indexes, but you can build the debit spreads in a way where you don't have the assignment risk and you can build out some asymmetry where you can make some more money on the winning side with no assignment risk. Case in point, here's an example on Meta. Okay, Meta, let's take a look at the price. We're at 659. So we dropped a little bit on the day. So we're down a little bit further. I'm going to look at Meta here. I'm going to do like I don't know if I'm going to get filled on this trade, but I'm going to try like a 6. Let's see. I'm going to pull back in this level. There's got to be a decent amount of demand back in here. So if we fall on Meta and it's just kind of overcooked or overcorrected, I do think this is a gap fill. I don't know. I don't need to pick, but if I took a trade now and price goes up, let's build that out. What I'm looking at is if I traded it in here, which means price has a little bit more wiggle room to the downside, I don't think this is a bad trade. Okay. But what's my timeline? I probably take this trade out to December and make sure that I'm getting more in reward than risk. So let's look at the trade right now. If it's 660 on Meta, let's look at this option chain. So if I went to a December 19th and it's $5 wide, I can buy the 655, 660. I can pay 247 to make 253. That is a 100% return, right? If this fills for 247, I get a slightly better profit if it goes all the way to expiration. If I go at the money, I pay 233 to make 267. I get a slightly better reward to risk. So 267 by 233. I make 114, 115% return on risk if I'm right. That's the type of trade I'd like to say is if I took this trade, let's do like a 230 or 240 debit, and I will take this trade. I'm going to put in here like a 620. I'll do 620. This goes down potentially to 600 is down there, but because of this demand area, either a 620 or a 600. Let's split the difference. I'm going to go 610 by 615. Okay. So I'm going to go 610 by 615 sell. If this trade fills for $2.40 debit, okay, 240 debit, that gets me a 260 winner for a 240 risk. Okay. So reduced by 240 is my buying power, but I'll put that trade in. This is just a pure bonus trade for daily profit play. Well, I guess this is for all of you if you want it. So this is going to go into the big Telegram channel, bonus trade, live trade discussion. This morning, I'm setting up a meta trade post earnings looking at near-term support and demand levels. So Meta 1219 expiration, buy the 610, sell the 615, 240 debit, pending good till canceled. If filled, max risk of 240 and max profit of 260. Okay. So I'll leave it sitting and it depends. If it gets filled, we'll know it and we'll update it. Cindy says, what's the best strategy for high reward, lower risk for $1,000 account? Double ups all day, all effing day. Double ups, you can risk as little as 20, 30, 40 bucks on those accounts. And we're talking winners that I mean, we're going after, if I get a trade for 40 cents, I'm trying to get out for 80 cents. Get a trade for 40 cents, I try to get out for a dollar, $1.20. I can take trades for 40, 50 cents that sometimes even offer $2, $3, $4 a profit. Double ups is the only strategy that's going to focus on those type of very, very low risk trades for high reward. Okay. Double ups is if I was going to be comfortable risking 50 to 100 bucks a day, and not necessarily a day, but like in a good trade. In a given week, I usually take 1 or 2 double ups because the opportunities are there. But if I'm comfortable risking 50 bucks, I mean, the ability to make a couple $100 or even making up to $500 to $1,000, you don't get that with any other strategy. So double ups is where it's at if you want low risk. Okay. All right. I'm going to set a chart alarm. Let's see if we can get down. I don't know if we will, but the markets might slide a little bit, maybe. Let's see if we get down to 610 to offer that trade to Phyllis. So there's 610. We come into this gap zone, maybe a 610 by 615 fills. And if it stalls out here and then finds a way up, also that happens to be an interesting fib spot. Here's a low, here's a high. That is right around that 50 to 61% fib zone. So if we came into that kind of perfect golden ratio and gap fill here, if it continues to come down or it goes right back up. If it goes right back up, then we obviously don't get a trade. No big deal. So this is another thing I think it's important is you don't have to force any trade ever. Okay. If you are not comfortable taking the trade, don't take the trade. So I'm looking at this chart saying, I think that this is a good spot to throw a trade in, not necessarily right now, the day after earnings. If this is going to stay lower and I still think the market dips to the 21 or 50-day moving average, if that happens, Meta's going to come down. If the S&P rolls over another 2, 3, 4%, 5%, Meta's coming lower. So if it does, we get filled and we still finish the year on a positive note. We trough out here, have some buyers step into some mechanical levels. Invisible support, but I think that's an interesting spot to trade it. So we'll see. Okay, but it's got to get filled first. If it doesn't fill, if this thing comes right back up and fills the gap right away, well, I guess the trade didn't work because we never got filled. But we're not out anything. Doesn't cost us anything. Just didn't take the trade. That's fine. It's a bull call spread. I buy the 610 call. I sell the 615. It's a bull call spread. That way there's no assignment risk. I'm long the call option. So the goal is if I get filled on this trade for 240, if price is greater than 615 by expiration, I get $2.60 of profit because this will close out for a full $5 winner. So a $5 winner minus what I paid for it equals $2.60. Okay. All right, good stuff. When do we sign up? Well, I've got a double ups masterclass today, Cindy, so probably not a bad spot to get into. Double up alerts. I think we have a checkout page, prosperitypub.com/double. Double up. There it is. So here's a double up. Deanna, can you share that link and actually make it a hyperlink? prosperitypub.com/double up. prosperitypub.com/double up. So mine doesn't turn into a link. But that if you copy and paste that, you'll get this page. So if you call our team, here you go, order by phone, talk to our team, ask for an additional best deal discount. They'll get you hooked up. We have class today, 904-706-3537. There you go. Was the session recorded? Yes, all these sessions are recorded. Bill says, did you say there's not an assignment risk? That is correct. If you do the bull call spread, the assignment risk is like less than 1%. And the only way that you're going to get assigned on this trade is if somehow this thing goes to the moon. Like literally, if this thing goes up to like $1,000 and somehow the broker is going to attach you to a sell call, shouldn't happen because you also have the long call to the trade. So when you're doing the debit spread, very, 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 and I would say never get assigned, but in April, I did get assigned on some debit spreads, which is ridiculous. But the nice part is they assigned me short and I'm still long, so I still took the profit on the trade. But I'm going to say there's less than a 1% chance that the broker attaches you to this sell call. So most debit spreads don't have assignment risk. Okay. All right. So that's a pending order for Meta. So we'll see what happens. Chart alarm is set. See if we fill the gap on the earnings trade. Chart alarm is set down here to see if we get filled on the price that I want. That is right back into this gap area. Yeah, I'll keep an eye on this one because if we hit like 620, no, I mean 610 should fill. If we hit 610, that should fill. We'll see what happens. Are getting everything you talk about in your morning sessions. Not sure what that means. I mean, what I'm talking about today for double ups is I will share the entire core strategy that I trade. Purely low risk, high reward. The trades we've been taking. There's a couple of core strategies. So it's a butterfly spread and an iron butterfly is typically what I focus on. Again, stupid names, but I want to break them down and get you to understand it's a combination trade. It's a combination trade that gives you a chance to cast a net every single day. If the market is going to find it, we can make a lot of money. Okay. So here is an example. I'll give you a sneak peek because everyone see current price. We're trading at 68.77 live. Okay. Now, what I don't like to do with a butterfly spread is go at the money. And the reason I don't like to go at the money is because this might offer me about a 2-to-1, which is still good. Okay. 2-to-1 is fine. But if price is going to go up for the day or go down for the day, I can get a lot more profit and a lot more profit opportunity, a lot more reward for risk. If, again, I don't know if this is going to happen, but if we had a massive gamma level up here that hasn't been touched for the day, then I would probably put my double up alert here, and this would offer me like a 9-to-1. Or if we had a massive gamma level that was filling up down here, I would put a profit trap on the day down here, and this would offer me probably like a 10-to-1 or better. And so in the middle, I get it. Like price could stay nowhere, price doesn't go up or down, and I lose and I lose. And maybe for the day, I'm going to lose like $100. Like no joke, maybe 100, $150. Okay. But if I'm right, this trade could be, like a 70-cent debit that offers up $930 of profit. This could be a, 60 to 80-cent debit that offers 940 to 920 of profit. I don't expect to make the full profit trap here, but what is easy to do is if I'm right on this trade could probably offer me 200% profit. So I could lose 100% here. I could gain 100% here, and I still make 100% return on risk for the day. That's a beautiful thing. So my double up trades are not just set it here, because I will show you if I do a butterfly spread right now, and this is what you're going to see in the class today. So I'll give you the, this is a sneak peek, but you want the full mechanics and break down the trades and the combos. Look, if I did a butterfly spread right now, okay, or even an iron butterfly like I did yesterday, if I do the 70-70, we'll go 20 wide. Okay, so right now you see there's about 30 points remaining in the day. Well, if I do that, you're just going to see it's expensive. So I'll go 70 to 90 and to 50. So the broker says, all right, Chris, you can have $16 of credit and you're going to risk $400. Now that's great. But what this trade really means is from 68.70. Okay. So let me stretch this up here. From 68.70, this is where I want price to be perfectly pinned. So this is what the trade is going to look like. Okay. I have my risk here. The risk would be $400. So minus $400, minus $400. And in the middle, I have upwards of a $2,000 profit trap. Okay. Because it's 20 wide. If we're perfectly in the middle, that's a $20 credit. And I pulled in $16. So the most I can make is $16, which is still good. Okay. But the reality is I need price to stay no higher than 68.86 and no lower than 68.54. If we're beyond 86, I'm losing. If we're below 54, I'm losing. When it comes into this trade late in the day, I need price to be greater than 54, less than 86. And you can see that right now, the broker says that we might be able to go to 68.40 and we might be able to go to 68.95. So I know that right now it's like it's fine, but it's not amazing. And I'm not necessarily skating to where the puck is going. This is just assuming that price is going to be choppy for the morning. So if I took a trade like this, I know that's my max risk. So my goal is if I can turn this where, let's say price is really choppy. Well, if I turn a $16 credit into a $15 debit, take the profit. I get $100 and I'm only risking 400. I'm getting a 25% return on my risk. That's fine. But that's not double up. Okay. Double up is if I think that price can go higher. Okay. Let's say that we, again, totally example based, but if we think we're going to go to 6,900. Okay. Let's say we want to go to 6,900. I'll just clean up the option chain here. So if I think we go to 6,900, then I will put my strikes at where I think price can go and then choose my net. I'm going to go, let's say 15 wide and 15 wide. This trade, I can get $12.90 credit for a $200 risk. Okay. Now, if price goes up into this profit trap, it's pretty easy for you to make a couple dollars on the trade and get closer to 100% return on risk. If we get close to that 6,900 level, this is probably going to trade for $10 debit, $9. Now we'll probably make more than 100% return on risk. Later in the day, this trade offers $300, $400, $500 worth of profit. My max risk was $200. Trades like that are pretty sweet. Okay, so how do I find these trades? Well, I'm always scanning my software. I'm looking at the highest gamma levels. I'm looking to see where I think the puck can go. And I try to put my position on there for that win. Steve, that's a great question. So if you see Steve's question there, is this something we learn in class to pull the trigger ourselves? Well, I mean, the double up services, I take trades that I personally take. Like I like the trades. I will take the trades. There's an alert service that goes to double ups. But teaching you the strategy, man, I would love an army of students that are doing double ups. That would be, and I think that's a group of students that would be extremely happy with playing the game of I'm taking small risk trades, every couple of days, or I like the trade, I take the trade, because it's always risk is small. Always risk is small. It's like those traders, I think, are more like bulletproof and more resilient than the traders that, I win $100 a day, I win $100 a day, I win $100 a day. Oh, I lost $1,000. I'm like, even you can hear how I even said it. It's like, that's a big number to lose for the winners of 50 to $100 a day. But what's funny is they both make money. But the mentality of a person that's willing to win 9 out of 10 trades, and then that loss might knock them back 7, 8, 9 trades, like that sucks. You got to trade through it. This is a loss. Shit, I got it wrong, but I'm going to I'm going to show up and trade again. I'm going to take another trade. This is the type of strategy where if I was given nothing but double ups, if that's all I had to do, I don't mind taking a couple trades a day. Because if I win the day, I plan on winning a lot of money. If I lose the day, I walk away held like head held high. I got the trade wrong, but it's always a small risk. And I just feel like there's a resiliency there with like the risk is just being better managed, you know? So again, that's why I have both. I like to trade both. I like to win 9 out of 10 times, but I also don't mind winning 6 out of 10 times when my winners are way bigger. So anyway, but absolutely, I'd love to have traders that want to do this stuff every single day, or do it when they think the trade is good. And yes, I mean, what helps me with my trade is I do use this software. I've subscribed to software now for 6 years. I love the software. And this helps me. And look, I had the team actually build me this. The team built me so I can go what defaulted as day trading. This is anywhere between a 0 and 4-day expiration. These are all the order flows that are coming in like this 4-day window or less. They built me a 0-day window. So now I can look at just today. And so for my double ups, this is where the puck is going on a day-to-day basis. Puck is going to go here. Puck is going to go here. Who remembers the trade that I took yesterday? I didn't take a screenshot of it, but I will show you. Okay, let's get this over. Let me just turn this off for a second. Edit study. Trying to think if I can just remove. Okay, there. So yesterday, this is where we opened. Okay. And what I had on my chart was this. I had a 68.60 and 68.50 zone. Now, did I think that price was going to go there? Absolutely guaranteed. Of course not. Okay. But we were so high up at all-time highs after gap, that when I looked at the prices in the morning, I thought, okay, we have a positive negative gamma pivot right around 68.60. We have our put walls starting at 68.50. If that price gets tested today, then we've got a good chance to make a lot of money. So that's where I put my trade. Okay. So I did a trade, just got filled for a 65-cent debit on my daily profit play. Nice win. So we put a trade right in here. I pinned the 50 and I went up to the 70 and I went to the 30. So that's my window. If I'm right on this trade, all I needed price to do was fall down to that level. This is price yesterday. So this is all happening in real time. Okay. We got filled for $18.95 credit. As soon as we had FOMC and the market started to get pretty dramatic, guess what happened? That trade right there offered us almost immediate profit. This was trading for like $100 to $150 profit within that first 5 or 10 minute window. Okay. It wasn't done yet. Okay. You're like, oh crap. Now what? This trade, I'll give you 3 opportunities. This trade offered profit. This trade offered profit. This area offered profit. All 3 of those levels, testing those windows throughout the day, offered profit. Okay. And here's that 68.30. Let me keep going in price. And that's today's gap. So the day closed. If you didn't touch the trade through the day, if you didn't manage the trade through the day, you would have lost. You would have lost $105. Okay. But this trade offered over $150. This trade offered over $250. This trade offered nearly $400. Profit. Return on risk, ROR, was 90 to 100% right here. Later in the day, that return on risk was about 200 to 250%. That return on risk, ROR, was over 300%. So it didn't have to be, oh my gosh, I had to get in and out within that 5-minute candle on FOMC. No, you actually had an hour and a half to exit the trade. But the nice part is the most I could risk, I was risking $1.05. That's max risk. Okay. Max risk. And this trade offered me $100 of profit. This trade offered me $200 of profit. This trade offered me $300 of profit. That's effing awesome. You know, not a lot of strategies can do that. So yeah, to your question, I mean, of course, I want to teach you where the puck is going. I want to teach you how you can find these trades on a regular basis. I don't do this stuff every day. I don't trade double up every day. I don't, because not every day looks like, hey, here's price. And do I know where the puck is going? Some days it is super confusing. Like we've got call walls like crazy, put walls like crazy, and price just kind of jumps around and it's not really clear. But my favorite days are when we have prices here, we have a massive sticky call level and, positive gamma. And it's like, okay, well, if we're going to get there, let's throw our net out there. Let's throw a profit trap and we can turn that into a double. That's a good trade. So that's what I'm teaching today at 2 p.m. All right. Okay. So I'm going to add in my gamma squeeze. Ultra short term. Ah, fudge. I messed up all my settings. Look what you made me do. Just kidding. Let me just edit the settings here. So the purple zone, I like to go yellow here. Okay. All right. So this is my positive, negative gamma. Positive gamma, negative gamma. Look at this. We're only 5 points away from call and put option volume sentiment. So it's just a very choppy price action day. Good for us for daily profit play. Nice little 35% winner today. Okay. Later in the day, where does price go? I don't know. Because we could come down to 68.50. We could possibly make a run to 6,900. We're out for daily profit play. So honestly, who cares? Who cares? We win. Daily profit play is a winner. Now it's like, do I feel like I need to risk the extra money to, maybe get this trade or maybe get this trade? Price might not go anywhere. So I'll probably just sit it out. You can close all of them, Steve. So if you take the trade together, as a butterfly spread or an iron butterfly, you take the trade together as one entry, you close it as one entry. No segmenting, no partial opens and closes. You're just taking it on as one trade, taking it off as one trade. Try to make it as easy as possible. Okay. All right. Good stuff. All right. I'm gonna roll out here. Let me put in the trade in our tracker for daily profit play. Nice winner. Center price this morning was around 68.60. We did the 69.05, 69.10, 67.70, and 67.65. Got filled for a 5 wide spread, got filled for $1, exited for 65. All right, just updating the tracker. Cool. Where can we review this recording? Deanna will know that. We'll have it recorded somewhere. I know these daily profit plan sessions are recorded in our youtube.com/financial wars. I do have a playlist. So this session should be posted inside that daily profit plan playlist on youtube.com/financial wars. Let me see if I can find it. youtube.com/financial wars. So even if it's not live streaming where we do it, so it's live. I mean, I'm live right now. I'm talking over myself here. So it's live right now. When this is done, it should be posted inside of my playlists. There should be a playlist put in here. Where are they? Podcast playlists. There you go. Daily Profit Plan with Chris. So it should get archived in there. But we're streaming live. It's posted here. So just timestamp it. Today's the 30th, so it'll say when it's streamed. And today's recording, happy to have you go back and review it. Cool. All right. So Project Options Edge video this week, pinch point video this week, double up alerts, masterclass today at 2 p.m. Eastern time, practical options. Everybody is welcome to join me for a workshop. Okay. Why? Because I want this. This is why I built these courses. I built these for foundational education. I built these for prerequisite education. And like I said, I sell this a la carte. I've been selling it for years now, a la carte. Um, Anybody that upgrades to a lifetime of my classes, any individual member service, I give you the full course included as a thank you for a lifetime membership. Okay. The quick guide is anybody asks me about trading options. I'm like, look, you got 27 bucks. Here's a great way to get started. I think it's, nobody's going to have buyer's remorse on learning. Oh my gosh, that's like the easiest introduction to options. And it makes the most sense because look, I learned how to trade options from nobody, you know, I've got some books over the years. They're boring as hell. Tasty's book from Julia Spina is pretty good. Some of the textbooks I've read, I don't know, Option Playbook by Brian Overby is pretty good, like applicable, but it also is like you could literally copy and paste like 50% of the pages in this book is copy and pasted because it's a strategy of like, this is your risk and this is your reward. And yeah, no, duh. So anyway, I just thought textbook stuff is so boring and learning the terms is so boring. People that talk options, they sound really smart, but there's really a practical, applicable way to just put a trade on. You know where you're right, you know where you're wrong, and that's what options is. It's a chess move, you know, and you're trying just to give the market a chance to do what you think it needs to do and make you money. Risk-defined trades. Okay. All right. We all good? So double ups today at 2 p.m. Videos going out for Pinch Point and Project Options Edge, Practical Options. This is free for everybody. I will post this in my Telegram. I'm hoping we get a nice big turnout for this one. I'll run this class at 2 p.m. I'll post the actual Zoom link on Practical Options inside my Telegram here. So everyone's welcome to join at 2 p.m. Today's double ups is going to be for members. Double up alerts for members. Cool. All right. Good win today for Daily Profit Play. I'll see you this afternoon for double ups. Talk soon. Thanks. Bye.